how we can help companies DIY their accounting, and also thereafter DIY their GST and the Form CS submissions to IRAS. Okay, so without further ado, maybe we can just do a short demo for what we are doing. Okay, without further ado, just sharing today, if you can see my screen, this is just a dashboard for Automate Technologies. It's our demo company. All right, and today we want to show you some example what we mean by doing accounting, right? Accounting means taking your transactional records and putting it into a recording system, as simple as that. So what transaction records that most companies have, there's a wide array, but most commonly, you will have something called these are documents. Most often you have things like your purchase bills, things that you buy from external parties, your sales invoices, things that you issue, documents you issue to your customers. Okay, and claims are basically purchase bills or expense receipts by your staff or directors or somebody in the company is claiming, has paid for it and claimed back from company. And lastly, bank statements. So these 4 documents are the most common documents that all companies will have doing business, right? And you're supposed to keep these documents according to the regulations, okay? And the timeline to keep these documents is about 5 years in Singapore. So literally, we tell people that if it's, let's say, 5 years, keep 1 more year, okay, just in case. So make it 6 years, and then you can actually omit and delete your documents away. But today, because of digitization, if you scan documents, right, you can just leave it there. Storage space is not expensive. If you digitize, right, you can keep it as much as you want, right? As for physical documents, if you do not digitize, you have to keep the physical documents in your office or in some storage places, and make sure those quality of documents are not degraded in time for an audit, either by ACRA or by IRAS. Okay, this is a requirement. Now, how you do accounting is that how you do automated accounting under our automate system is as simple as the whole concept is to upload these documents, these 4 documents into an upload bin. So over here, you can upload your purchase documents, your expense claims, your sales invoice, and bank statements. The system would use its own technology, vision technology, and extract the information. And if the information extracted already is correct, you can check, you can then sync it back to your accounting system. The accounting system, the accounts will be primarily done. So in this example today, we will show you something called Ian Can Cook. I'll throw in some documents and then show you what end result. And this is to show you what is the technology today for automated accounting, right? Accounting can be done manually still. You can still software systems like the accounting softwares. You can still come in here, you know, click a purchase item here, record a bill, and then key in manually yourself. You key in the bills, you know, you can enter in all this manually yourself. But the technology you have today is actually a bit more advanced. We go back to the documents, do the extraction, and push it into the accounting software. So purchase bill today, let's take one example here. Okay, we select one case here today. Okay, so here it takes up to some time to extract, but the whole idea is not to wait here. Okay, so if I go back to, I'm not skipping, it's extracting. Let me show you what happens is that, okay, if you upload a document, it comes here. You can see the bill here today. Once the thing is extracted, finished, you will then move over to checking or approval, means it's extracted. So the whole idea is not to put here and wait in front of the bill. You can do that. You will extract it within 30 seconds to maybe 60, 70 seconds. But the system will actually move the bill over to checking. So let's take a look here. It is finished already. So the system has extracted the bill. Okay, and over here it has recorded. This is a commercial some equipment. The system will then auto record this as an asset. Okay, try to record this using AI to classify it. So not just it extracts the information out, it also classifies it for you. Of course, as a user, you can click the classification if you feel that it's not correct, and then select your own classification. So here is built something as a click and play system, automate. The motivation of this was actually my daughter. And she's only like 8, 9 years old, and she knows how to use the TV screen and press screen to get her things on internet. So today we try to automate very similarly. It's more like click and play. Okay, so there are various so-called expenses, categories expenses here. Okay, or even things with inventory they buy, or in this case here, assets. Right. So in this case here, the asset was selected, right, as other assets here. Okay, own usage. Let's say if I'm not satisfied own asset, I may select, let's say, asset and put it as a industrial equipment, other industrial equipment. There you go. Okay, and it's finished. We can check the details here. Okay, 2018 is extracted correctly in December. It also extracts your details of your supplier name. And if your supplier name is not your accounting software, you create your supplier name for you also. Okay. So today I just want to show you what it looks like. I will just change this to today date. This is a bit far away. Let's change it to January, because I don't want it to be fully depreciated. Okay, save. Just to make sure that this is a unique number, I put it there. I do approval. I sync it. Okay. It's already done. It's gone to automate. And if you can see here, inside this document system, all your documents are already so-called the sync to accounting system is listed here. If you want to see where it goes to, you can click View Details. And you can either view on automate, it goes back to your automate system. Okay, now where did go automate system? Let me share you here. You treat it as an asset. So in automate here, when you buy something, it either goes into expenses, costs, or your assets. So if we classify asset, you go under asset module here. The item here is recorded as asset. Okay, you bought it for 18,950 euros. The exchange rate calculate back to Sing dollar function of your reporting currency, and your depreciation is already running directly from the system. The software is already doing all your accounting, including your depreciation automatically. And if you buy more than one asset in the bill, it will list each individual asset with a unique number. Okay, so for accounting wise, you need to have a unique number. So this can also help you to do your stock take for your, not stock take, but asset take for your individual assets to buy, like computers, tables, renovation, furniture, cars. So this is quite comprehensive. Okay, so this is one of the things that we have. Now, besides bills, like I said before, the system also can extract out your expense claims and so sales invoices. Expense claim is similar to a bill. You can throw in a bill. Okay. The only difference is that you need to put in who is the claimant for the expense claim. So let's try it out here. This time I just let you see the system as it runs. Okay. So this is a system here, right? So it extracted how much you got to pay. It also recorded the GST accordingly. And you can see here the details are all extracted. All the details are same as per bill. The only difference you have the claim date and the claimant name. So for example, if we do today, you buy this on behalf of Automate, right? And you make claim today, okay? I'll have to put in your claim date and then basically your name here, add new claimant, okay? So let's say I'm the claimant, I put David. Okay, save. When you push the accounting record, the system will still record this as a purchase from this supplier, but the amount payable is owing to myself, David Lau, and not to this supplier name. So once you approve, it goes through. I want you to notice something also. There is this accrual calendar here. So if this system here is able to detect the date of this service, the system will be able to put accrual date there for accountants. Means to say your accrued expenses or your deferred expenses is already automated in the system. The system will actually record the entry for this bill, and it will do the accrual and deferral adjustments for you automatically into Automate, right? You can always click this calendar here and If you want to change it, you can always alter the date. Like for example, I alter this date to January 2024, and maybe say this is up to maybe February 2029 February, right? Save. What it does is that this bill will be recorded on so-called this date, and it will then accrue it and push the expense to be recorded in your P&L over January to February. So this system here is already catered to helping accountants or even individual persons to do the accrual system accounting. Okay. Now for non-accountants, right, what you mean accrual system accounting means to say that if you have a bill on this date may not be the date of the actual expense. The expense is on maybe, for example, if you buy a training package, all right, training package on the 1st of January, but that training is for over a 12-month period from January to December. You need to spread out the expense over 12 months for proper accounting, right? So by just doing this, you put the dates from January to December, the system will spread the expense out over 12 months for you. Okay. If on a reverse, if this was a sales invoice and you bill your customers in advance, all right, you don't take your income on the date of the billing of the invoice. Okay, you can spread the income over a period of your service. So this is very important. This part of accrual, so-called adjustment, right, means to say you got to keep an Excel spreadsheet. If you don't use such a system, you have to do it manually. Okay, or you have to do a setting manually into other kind of softwares. So as accountant here, I wanted to solve this problem. We created the accrual calendar system for Automate. Okay, and once you sync, the system goes into Automate, and again, your accrual is already done in Automate. Okay, so in Automate here, you can see claim. My claim is here. Okay, and the accrual system, if you go to reports, you can see the accrual report here. Okay, now what I'm teaching you here, this is the DIY accounting part. You know, what I'm going to share with you is that because the system has made it very simple for you, you just need to learn a bit and you can use the system to upload your bills, upload your sales invoices, upload bank statements, and then do the rest of the work. Okay, and if an asset, you buy asset, just put in the asset, the system will do your adjustment for your depreciation for you. There are a lot more things to have here, but today I think we will just go on to the next stage. Okay, there are lots more to accounting, but that can be covered in other sessions. But just to show you that today, the fulfillment of the IRAS and tax requirement, having documentation, just put it in document and document your push accounting, and thereby doing this, you already have DIY accounting and you fulfill the documentation requirements, okay, of ACRA and IRAS. If it's online, you can keep this for more than 5 years, not an issue. Right? Now, after you put all this information in, you then have to do the GST, right? So here, you just go to our system called Taxomate here. Here you have GST and taxes. Over GST here, we run the GST module here. Okay, so in GST module here, we have something called F5. Okay, F8 won't come unless you're trying to close your GST permanently. So F5 will be the default. Over here, we have my GST quarters are basically 3 months per quarter. Okay, and I already filed the quarter for September 2023. So let's assume I'm filing now for December 2023. Okay, I should file this by January, by the way. Okay, December 2023, I sort of filed in January. So I'll just give you an example. Okay, by clicking this quarter here, you can see the GST is being listed here already. Okay, just to make sure that your data is correct. If you want to check the details, you can always click download. Right, you will get it in Excel spreadsheet to check the details. So what you have here in Excel spreadsheet are the supporting transactions row by row to support the summary numbers you have here. Okay, you get something like this. Okay, we have 3 schedules here. Detailed report here refers to the individual. Let me make it smaller a bit. Okay, so these are the actual transactions, right? These are transactions for basically your box 1, right? So it will list down the transaction. This is 8% SR. This is a 0%. This is your TX. This may be confusing, but what it means that SR is actually for your sales invoices. Okay, when you sell something, you need to charge GST. It's called 8% standard rated supplies. 0 rated means you sell overseas, it's 0 rated supplies, and out of scope supplies, you sell something that GST doesn't apply to it. Okay, As for purchases, it's called TX. You buy something from another GST trader in Singapore, okay, the moment you load your bill into document will extract the GST out. And it also know the GST code to apply to accounting. So all this is generated automatically. And what we do is that in document, the extraction is line by line, not total bill. If a bill has individual lines, each individual line item would come over here. You can see here. And then here basically is GST from non-registered traders. If you buy a purchase item from a company that's not registered for GST, it's called 0% NR, not registered for GST. So we also list them all down here. You can see here there are box numbers, right? So from here, the box numbers, the summary for this total summary here is summarized into these box numbers here. Okay, and then you get this summary here. Okay, and this summary basically goes into here, right? So this is how we compile your GST, and this is what is required to keep as a record. All right, if you're comfortable with the numbers, you click use computation. Okay, and now you can file two ways. One is to file it by Corp Pass. I won't do it today here. In Corp Pass, you will file basically using your Corp Pass, and this will go directly to control GST directly from Automate system. Okay, if you file manually, you may not want to file by Corp Pass, or your Corp Pass not set up. You can still file manually. Means you say you take the numbers and go to IRA's website, key in your password, right, and then you type in. You basically type in all these numbers into IRAS according to these boxes here. So this is how you file manually, and after you file manually, you would have a so-called a acknowledgement sheet. For example, let's say I file this in January, okay, and this is your Excel spreadsheet you file. See, after filing, it becomes green, and your filing, remember here is 112.83. This is compliant to your calculation here, 1113, right? So this is how much you can you must pay IRAS, right? So IRAS may then give you a notice assessment. Normally it's on the same day we file, okay? And you can then type in what is the notice assessment. Let's say 112.84. Okay, upload the notice assessment from IRAS and record NOA. The system will record that you have, oh, I type in wrongly just now. I type in one number short, but this is what you have to pay. So if you click record payment, okay, you can type 112.84, okay, and then select the bank, the date of the payment from the bank. Let's say you pay the bank from the bank, let's say on the 14 days, right, 14th of February, submit. Okay, your GC filing will become gray color, means it's completed for this F5. So it's very important to have this because in a dashboard here, we have a compliance summary. So as a user, you can see where you have filed, what is coming to file, and what has been completed and paid. Green is for filing completion, but not paid. Okay, gray color means you filed and you paid. Red color means to be filed in the future when deadline comes. Okay, so that's for corporate. That's for GST. For corporate tax now, we go on to this case here. We are in YA224, this last year. Okay, I'm filing this very late, but let's say I take Form CS. Form CS for YA24 is actually for financial year 2023. So it says here, once you click that, you can see that the basis period is up to March 2023. Check the name details are correct. Click next. Okay, answer some questions here. These questions will be asked in IRAS also. So in this case, do you qualify for tax exemption as a new company? I will say no. Do you have any pre-filled IRAS? You can click here. You can pre-fill some of these data from IRAS. If you feel that the data from IRAS is not correct, you can always override and key your own data here. Okay, these are tax losses data and unutilized losses, unutilized capital allowances. Okay, if you want to know more about it, you can go to IRAS and click the website and ask what's this about. Okay, and here is there any change in activity and shareholders? Because if there's change, you can't qualify to claim these amounts, right? These are basically your benefits that you can claim to deduct your taxes this year. So compute tax. The tax is done, all right? Again, if you want to download the details, you can click here, download details, okay, and you can have all the schedules, okay, and if you want to amend, you can click here, edit text. Over here, you can see there's a text computation, all right, and the document information is here. Okay, if you want to make, I'll show an example, capital allowances. So I can't see capital allowances. Let me try again. Edit text form. Okay, you see capital allowances here. Current allowances. Just a moment. Show you another demonstration.
What is
Now I'll show you this. Okay. Let me show you from this one here. Another example here.
I think, David, this part is mostly clear. It's just the capital allowance part, so that's straightforward. Can I quickly ask a question in the meantime? So there was one question on whether this software is actually linked to Zero or is designed to replace Zero.
I think it's a new technology, and I wouldn't say to replace Zero, you know, and I believe all the software out there, they cater to different so-called purpose and businesses. Okay, our thing is that we developed this because we wanted a greater technology in terms of using new technology to advance the usefulness of a software. Okay, to replace Zero, I don't dare to say replace Zero. They are $20 billion company. Our company is not even $10 million company. So for that, right, I would say that we want to compete against ourselves to get ourselves better and better. All right, and if we were to compete against Zero, so I can share you something. If that technology Zero is up to this level, and if we are going for something higher, if I compete against Zero, I will only be reaching up to that level here. Okay, we're actually looking at bringing a higher level of usage of our system to the market, as well as to accountants, as well as to business users. So in terms of what Zero can do today, I can't comment, but I hope that if they can look at what we are doing today, they can also advance that technology to bring better usage to the market. Okay, let me continue now with the Form CS. Sorry for the slight changes now. Okay, so this is the company here. The Form CS, again, I'll put the answers here. Right? No. No, compute tax. Okay, so this is taxcom here. All right, you can download the taxcom here, or you can edit. So edit here, you can click the few fields here. Just now was capital allowances, so you click capital allowances here. Okay, it will actually show you a summary of your balancing charge and all your capital allowances here. Capital allowance are basically deductions. Deductions for what? Deductions for assets that you buy. Okay, and then here a balancing charge is basically adding to your tax for assets that you dispose. Okay, just a bit on technicality. When you buy expenses, you sell things and you buy things at cost, right? Very simply, those that are for your business, your income is taxable, your expenses are deductible. But if you buy things like assets, by right, these are not deductible expenses. So what does the tax regulation do is that it came out with these sections on 19A, B, and also to provide you deductions for assets that you buy. Okay, these are capital expenditure. Capital expenditures by right should not be tax deductible, but there is an additional law that section of law that allows you specifically to allow deductions. Now, how you deduct is through tax depreciation or tax, they call it capital allowances. Okay, so in this case here, a bit technical. These are all very technical terms, but our system here, because we have the asset schedules, they'll list all the assets here, and they will pre-calculate for you the default deductions according to the most aggressive number of years. Like for example, here, number of years, you can choose 12 years or 16 years to claim the expense over. But when you default, when you buy an asset, we have it claim within the shortest period of time. So in this case here, 19, the so-called the tax depreciation is over 6 years, 12 years, or 16 years. Okay. Okay, you have these three assets there. If you have 19 here, 19A, these are for things like your office equipment, computers, so on and so forth. Okay, you normally can deduct over 3 years or 1 year. Okay, so based on your classification of asset that you buy, we will then choose the most aggressive so-called tax capital allowance deduction for you. Of course, if you want to change, you can always edit here and change the years. So what it means to say is that you can DIY your this. If you learn a bit of tax law, this system here can pre-calculate for you. And what you need to do is then make a decision: do you accept this calculation, or you want to edit it a bit and choose your deduction rates. When you sell asset, for example, in this case here, this item was sold, right? The disposable proceeds here is this amount, okay, and this amount is 9,000 is your asset value. You made a profit. So this profit again is not only not taxable, but because of this regulation, it's called balancing charge. You must bring it to tax. So a bit technical here, but what I'm saying is that if you're accountant or if you are a non-accountant, this tax system already pre-calculates the thing for you. For your easy use. And for these are for maybe accountant users. If you feel that you want to amend some of these pre-calculations here, right? Like for example, not taxable income, you can click. These are actually things in your GL, right? Like for example, gain or reversal of plant equipment. Okay, you can click and see. You can then change the nature of that classification. So we standardize the entire transaction codes, and we have already standardize it according to tax regulation and financial reporting regulation. Hence, you can have this automation in progress here. You can make changes. Okay, and once you're happy with it, you can recalculate your tax. Okay, and you see how much tax you pay, right? And if okay, you exit. Come back to the summary page, and you can use this tax calculation to file to IRAS. Okay. So again, you see this is actually the pro forma form CS, which is the actual form. And you continue. Check your details here. Okay, this is not relevant, it's blank. Continue. You're allowed to file using the seamless online filing to IRAS. Okay, so put your name here. So over here, you have a choice. You want to file directly using a Corp Pass, or you file manually into your tax portal, directly IRAS yourself. So let's try seamless filing. I will stop when you see the Corp Pass. Okay. So over here, you can click it, and then you proceed with your SingPass. If you're authorized to file for the company, this will then go directly to IRAS. All right. So this is how you file your corporate tax. And upon filing finish, what you have next is actually your taxes here. Over here will become green color, right? Green color, and then you just have to record the payment of taxes to IRAS. Okay, so here will actually be completed. All right, so we have come up with a demonstration for how you can DIY accounting and also file your GST and corporate tax using Automate as a Tier 3 ASR Plus software. Thank you very much.